Good morning, guys. Welcome to this Wednesday, July 29th. And we got a market which is pretty much holding on to the holding on by its seat of its pants. And it's barely making a little dent to the upside here. We've been trying to take this lower. The market has been trying to bust lower a couple of times now. You can see a nice little retest here on the ES on the way down. Support's holding at 74.15 to 20s. And we are pretty much stuck in this range right now. The ES is doing a lot better than the NASDAQ. NASDAQ is getting massively creamed, and that could still be some weakness in there. Today is also Fed day. We're going to get a Fed announcement. So news this morning is not too much news this morning. We had the mortgage apps come out this morning. They were all to the downside. These yields are creeping higher. They're all negative numbers on the mortgage apps. At 10:30, we get an oil report. We have some small report here at 11. And then, of course, at 2 o'clock, we get the Fed announcement. And that's going to be this is the second announcement that Kevin Warsh is presiding over. And we'll see how he handles it and what the market feels about it. And I think if he follows through on the premise of stopping or not trying to make the Fed being central into every freaking thing, then we may have a shot at having the market not reacting so violently to everything they say. But we'll see. But I don't think anyone's expecting a rate cut or rate hike in this meeting. And of course, the press conference is going to be very interesting to see what he has to say at that. But that's the big news of the day. So prior to that, we don't have a whole lot of news driving the market. As you can see, yesterday we were trying to take this. I mean, it's the last few days actually. We have an attempt to take it lower here back on the 23rd and 24th. We didn't quite make it that low. Here again on the 27th, they tried to take it lower. 28th, they tried to take it lower. So we've been here 3-4 times now, and it looks like they're holding that support area. A good sign. It's always good when support holds, especially when you have all this weakness going on in the NASDAQ. So we are back in a spot where we're just going to start off range bound on the ES again, and that's kind of watch the direction. And as you can see, I mean, we are still in that same spot where we have all this volume going on the ES. Worth pointing out is this area in the middle. Here's your 74.60s. It's getting less and less important. I think what matters now is really this lower edge here. All right, I'm going to drag it down right there. All right. So this area right there, you see this on the left on the long-term profile, 74.15 to 20s. Here's your volume profile. And I've been trying to get there. I've been down here several times. And if I split out some of these values, so these are the last few days of trading, right? You can see how that area here is getting more and more important, and it's they've been holding it, and there's a volume edge right there. You can see the how much a volume skew or an obvious volume skew up here, where the TPOs and the volume doesn't match up very well. You have the same story up here on the 75.95 to 7600s. That's always a good indication that something is off when you see that kind of stuff. The market needs to consolidate, trade over that area, and digest it. But right now, as you can see, several trading days, they just can't take out that support there. And as long as that holds there, I think we're in good shape to just stay range bound in the spot we are at. Today could be a day which that changes, though. We could very well see the market take off to the upside or bust through this support area, depending on how Borsch handles the Fed announcement. But anyway, I'm gonna just fold this together just a little bit to keep that in at top of mind. That this is a pretty good support area now. That's 74.15, 16. So I moved this the area up, I had up here at the 74.70 down right down to 74.10 to 15. So starting off range bound just means that we're going to look to sell strength against that 74.85s, against the 7500s, 75.10, 75.20s. Looking for short opportunities there. Looking to buy weakness, 74.70s, 74.60s, 74.40s, and 74.30s down to that 74.20s and 74.10s. Now, when I say a buying opportunity, it's exactly that. It's a buying opportunity. It's not just buying the support area or selling the resistance area. It has to do with when you get to an area, this is an area of interest, so an area where potentially the market could stall and then reverse. So you're looking for a buying opportunity, but if it doesn't set up or it doesn't stall, then the opportunity is gone. So you can't just wait for it to get there and buy and then hope for the best. You have to look for what the market is doing at the time. Is it failing? Is it taking out the area? If it looks like it's failing, that's where you have your setup, a retest failure setup for a buying opportunity or a retest failure for a selling opportunity if you're above the market. Worth pointing out, because sometimes you forget um, how these areas really work, and then it's easy to just assume that the market is likely going to stall at each area, and you get a little bit too aggressive. I do that myself. It's easy to get a little bit like tunnel vision on it, and you have to just remind yourself like. And when the market gets there, watch the activity. If it looks like it's failing, well, then you can try your trade. Otherwise, just kind of let it take it to the next level, and then look for the spot where you want to uh, where you want to put on that failure trade. Now, in a directional move, you can certainly trade between the areas if the market is running higher or lower. Getting long when it takes out that 7,500 for a run up here to 75.10. That's a nice 10-point move potentially. The only thing you want to be mindful if you're trading it that way is that when it starts breaking out, you want to be early on that trade. It's always a little run above the resistance areas or below the support areas to run stops. But then you have also that little extra volume move that then moves the market past it. Now, when that happens, that's when you want to join that trade. Don't buy into resistance. Don't sell into support. It's always worth reminding yourself about because that's easy to do. Market looks like it's absolutely falling apart, but when you look at the F2, you find out like, yeah, we are right into the support area. So why am I selling into it? I'm trying to join that trade, but I'm selling into support, and immediately the market stalls and reverses on me, and I wonder why I lost my you know what. Anyway, so a few little words of advice on that one. But on the ES, just flat out range bound trading right now, looking to sell strength against that 74.85s, 7500s, 7510s, 7520s. I would probably start leaning in on the long side a little bit more above the 20s. But to these first four levels, definitely look for short setups against them. And on the way down, looking for buying opportunities against 74.70, 74.55s, 40s, 30s, 20s, and 10s for rotations back up again. All right. So range bound market, be expecting it to stick in this range. So as it approaches the edges, you're looking to fade those edges. On the NASDAQ, that's the one which has been absolutely freaking hammered. And if you're looking at this guy, they are down in this lower price discovery area, and it's just not a very pretty picture. So NASDAQ, as you can see, this whole area of value up here, which we're trading, that's where the corresponding the ES area is. So the NASDAQ is the one correcting in a big way. The ES not so much. It's holding on to their gains pretty darn good. NASDAQ has some significant areas to get up above before we can really start getting excited about it again. There's an area right there to pay attention to on the NASDAQ as well. And below this area now, the 28 to 20s, there's no reason to stay on the long side until the market really starts taking out these two resistance areas, the 28 to 20s, the 28 4 to 500. So these two areas of resistance need to come out before I start getting excited about the long side on the NASDAQ. And you can tell those big high flyers, the Microns, the SanDisk, and those guys, they're almost cut in half, I saw SanDisk. If you haven't seen that, they was trading at the 23 up at $2,300, the storage company, and then they are now back down to 1,000. So that's how crazy it's been, and that it just tells you that some of these people chasing the AI trade, and the last one they were chasing was these conductor company, where the light conducting companies, where they are using instead of copper to move move data between the cabinets and the circuit boards. They're using light or optical wires. And the Corning and this Corning is a different company, and these guys are also massively. They will run up like crazy and then absolutely hammered. So people are chasing that. They get caught and they get their ass handed to them because it's so crazy. Anyway, so on the Nasdaq, I'm gonna stay range bound. I'm gonna still favor the short side. So I'm looking to sell strength 2800, 28,000s, 28,070s, 180s, up to that 220s. That's the first levels to pay attention to. But I'm looking for short opportunities there for rotations back down again. If they take out the 220s, I'm taking off that short bias, going back range bound and starting trading it more range bound. At that point, I start looking for that retracement trade, retracing these single prints to the upside on the F2. And if the in a retracement trade starts getting some momentum, yeah, maybe we'll even take out that 28,400. So sometimes on the Nasdaq, you get these massive runs to the upside. Who knows? I don't think it may be in the card today, but let's get past the Fed announcement before we really see how the market's going to react to it. We also have a ton of earnings, if you know. Maybe a lot of earnings coming out in the afternoons, a lot of tech earnings. So you're going to have a lot of that stuff leaning on the market as well. But so far, the tech earnings has been pretty good as far as I can tell. I haven't heard anything about big misses or anything like that. And the AI spending is still very much up there. So, so starting off with a slight bias to the downside on the Nasdaq, buying against support, the 890s, the 830s, 730s, 640s down to the 600s with a lot of caution. I would not be super aggressive on buying those. As you can see, yesterday I got hammered, and it's so volatile, so whippy and so volatile that my 80 tick stop is just way too small. You make the stop bigger and it whips against you, you're down a good chunk of money. So it'll hurt for sure. So I would just be a little bit cautious trading the Nasdaq until it calms down, or you see a nice run. A nice run is always something you can try to join, but it's something you had to trade with a bit of caution, especially when I have all these algos running it back and forth here and really creating those whipsaws. So if they start taking out the 220s up here, 28 220s on the upper edge here, I would start thinking about a retracement trade. Otherwise, I'm just keeping my bias to the short side at least to get started. So who knows? I mean, they're in price discovery to the downside. They're making new lows, and you see ES held their support area for several days. You can see Nasdaq is making new lows every day. So who knows if today's going to be the same? But eventually they're going to run out of gas. So they're squeezing it right now. So that's the Nasdaq to get started. So stay on the short side, look at with favor selling strength on the Nasdaq against that 28,000s, 28,070s, the 190s, and the 220s for rotations back down. There could be something in between here. Nothing obvious to me sticks out, but there could be something right here at the 130s, but I haven't put a level there just yet. All right, so that's the ES and the Nasdaq. Looking at the bonds. The bond market, again, a very different animal, a much more deliberate, much slower market. And as you can see, we are in a bigger picture, capital flow on the bonds. We have been down here at that lower support area at the 109.10. That's so far trading back up again. So yields are it has been slowly coming down as the prices go up. But we'll see if they can hold on to this. Right now, they're building value here at the lower end of the range. And if they really start busting through that 109 and yield starts creeping up about 5%, that would be pretty bad for the market. But as you can see, the bonds in the long term here has been slowly grinding to the downside. Has not been showing any strength at all. And remember, so as the prices go down, yields go up. And as the prices go up, yields go down. Right now, you can see that it's been drifting to the downside. And I would start off range bound. I would look to I would watch this lower support there at the 110.10. If that comes out, I would be more aggressive on the short side. But right now, we'll see. It's kind of in a twilight zone a little bit. That if they're going to take this back down again, or if they're going to start trading higher. Yeah, so I would stay range bound right now to get started. Looking to buy against the 110.16s and 110.10s. Looking to sell against strength 110.26s and 111s for rotations down. So only 2 levels up, 2 levels down. That's it for today. And if they take out the 111s on the upside, stay on the long side. If they start taking out that 110.10, I would be a little bit more aggressive on the short side. At that point, I think there's a shot again to just get right back down again. So. As you remember, so capital flow, they've been slowly trading higher here. So they're up here against this testing resistance now at the 111. And if you get a little bit of strength and they start taking that out, we can be right back up here in the 112. Yields could be coming down nicely. But if they don't, if they start trading back down here to test the lows, yields will be creeping back up again, and you'll find market not liking it a whole lot. These long-term yields are not great. A lot of money need to be refinanced, and a lot of loans need to be refinanced, and they're being refinanced at higher yields. It's not a great setup at all. But right now, I'm going to start off range bound and see where the market is going to go. And remember, we are still very much waiting for the Fed announcement and what's going to happen there. That's going to be a pretty critical component of today's trading. But it happens later in the day, so before that, we're probably going to see more range-bound trading. Doesn't have to be like that, but it most likely will be. So crypto-wise, the Bitcoin futures backed off a little bit, Ethereum backed off a little bit, but kind of holding on and all waiting for that Clarity Act to pass. Nothing new on that front. Gold, as you can see, is rolling today. That's the last trading day on July 29. It's the last day, so you can see how that book is absolutely messy. So not trading on gold today. Silver is moving a little bit to the downside. Oil is the one I'm watching more carefully, creeping back up again at 84. They were down at 76, so heading back up again. So volatility in oil is going to be a factor as well for the market. It's going to be as the shooting war continues there in the Middle East. So we'll see. Right now, I think they traded up because the Iranians rejected the deal or something like that. But I'm not even trying to follow that back and forth because you don't have all the information, and you're just kind of seeing headlines come out. So market's seeing headlines too and reacting to it. So trading oil, very whippy, very difficult. And trading if you don't know what the headline is going to be, you can be certain you'll be on the wrong side of that trade. So unless you know something, I would not be trading oil right now. Just stay away from it. Unless you see, unless you get a headline, you see the market moving and there's nothing contradicting it. Well, then you could try joining that trade, but that would be the kind of trade you would look for on oil. All right, so that's cryptos. These are all Coinbase futures. Back to the ES and the Nasdaq, and we got a little bit of a dump there. Just look at that. So here you see something happen here at 8:15, big move to the downside. There's no new news at 8:15, so something happened. Some headline came out, and big move to the downside. They're right down here to that lower support there at 45 or 75, 50, 70, 74, 55, and stalled there. So that's pretty much where we're at. So I'll wrap it there for now. So starting the ES range bound, starting in NASDAQ from the short side, we know when to change our minds, and then we'll take it from there. Alrighty, guys, we'll wrap it there. I'll see you back at 11:30 for the next update. So good trading, and I'll see you guys back then. Later.